In this class today, we're going to look at how to use the available question here to prepare statement of financial position or balance sheet of a company. Now, you are requested to prepare this question and answer the necessary uh, question that are follows. Now, let us look at the question again. The question. The question said ABC Limited had the following trial balance. The capital is what? 1,523,000. The cash balance is 120,000. The loan is 30,000. The debenture is 25,000 naira. The plant and machinery is 150,000. The land and building is 1,180,000. Office equipment is 145,000 naira. Debentures 170,000. Creditors 124,000. Bill receivable 65,000 naira. Bill payable 128,000. Now you are required to do what? Calculate the initial capital of the what? The business if it is not given. If the initial capital of the business is not given, how will you calculate it? Using this question. Let's assume that it's not given. How will you calculate it? And this is why this is important. And two, show the value of the what? Current assets and the current liabilities in this account. And as well, calculate the quick ratio of the company. Now, for you to answer this question, first of all, you assume that you are not giving the initial capital. The capital of the business is not given to you. And you assume it's not given to you. You want to calculate it. You want to prepare the what? The statement of financial position or the balance sheet of the ABC Limited as at 31st December 2023 and find out the what? The initial capital. Assuming it's not given. How will you calculate it? First of all, let us look at the procedure. First, you have to do what? Draw the statement of financial position or balance sheet using the T format. We're using the T format in this question. In this question, we're using the T format. You have the debit side and you have the credit side. Let's say the debit side is in the left side, while the credit side in the right hand of the right hand. So now, how will you post the interest to enable you get the initial capital, assuming it's not given? Now, from the question, you are now looking at, you have been given the question. After drawing it, you now know that we have the non-current assets. Non-current asset, which is a fixed asset, you will now calculate them under non-current asset or the fixed asset. The items there is a plant and machinery, which is what? 150,000. Then the next item in the under non-current asset is land and building, which is 1,180,000. And the office equipment, which is 145,000. And the total of the what? The non-current asset is 1,475,000 naira. That is the total of the what? Non-current assets or fixed asset of the business is 1,475,000 naira. Now let us go to the what? The current liabilities. The current liabilities is, according to the question, we have loan 30,000 naira. We have creditors 124,000 naira. Then we have bill payable. We have 128,000 naira, which is a total of what? When you add the 30,000, 124,000, 128,000, when you add them, you have 282,000 naira. That is current liability. Now, we now go to current assets. Current asset in this question is the cash balance, which is 120,000, the debtors 170,000, bill receivable 65,000, and the total current asset is 355,000. Now, you now move to the capital side. The debenture will have 25,000 naira. Now, after I have added it like that, what you're going to do is what? To get the what? Initial capital. Assuming it is not given to you. To get the initial capital, what you're going to do is what? Add the non-current asset or the fixed assets, which is 1,475,000, 1,475,000 naira, added to the what? Current asset, which is 355,000 naira. Then when you add it, you have 1.830 naira. That is 1,830,000 naira. Then when you have that, you now keep it to one side. You now come to the debit side. Then you now add the debenture, which is 25,000. You add it to the current liabilities. You have the current liabilities is 282,000. When you add it, then when you add the 25,000 plus 282,000, then you have 307,000. 307,000 less. When you less it from 1,830,000, 1,830,000. Then what you are going to have is 1,523,000, and that should represent the what? The capital. And if you check the data given you before, you know that the thing corresponds to what? 1,523,000 naira. That is the what? The value of the what? The initial capital. Assuming it's not given to you. That's how to find it. And automatically, I already prepared your what? Your statement of financial position, which is the current what? All the items that are involved. Now let us look at the question number B. Show the value of the current assets and the current what? Liability. The value of the current assets. The value of the current assets, according to this question, is when you add the cash balance, which is 120,000, you add the debtors, which is 170,000, you add the bill receivable, which is 65,000, you have 355,000. That is the what? The value of the what? Current assets. Now, if that have taken, now let us look at the value of the what? Current liabilities. The current liabilities represent, the value of the current liability represent all those items that are under current liability, which is a loan, which is 30,000, creditors 124,000, bill payable, which is 128,000. Then when you add the items of current liabilities, you're going to have 282,000 naira. That is the current liabilities. Now, question number what? C says calculate the quick ratio of the company. To calculate the quick ratio of the company, you now ask yourself, what is the formula of the quick ratio? The quick ratio simply means current assets less stock divided by current liability. You have the quick ratio. That is the formula. And in this question, you discover that from here you know that there's no closing stock. There's no stock at the end of the period we are reporting. So automatically, the current liability is the current asset is 355,000 less divide by current liability, which is 282,000. What you have is you're going to have 1.25. Now, how do we interpret it? To interpret this question, we now say the quick ratio of this company as at this period, of ABC Limited as at this period, is 1 naira 25 kobo, which means in every 1 naira the company is owing, what they have is 1 naira 25 kobo. And it means that the company's liquidity position under IC test is not actually adequate. Because if the 1 naira is being paid, what they have left to run the business under current asset is 25 kobo. So this is the answer. If you have any question, please go ahead and direct it to us in our email at christopherjem1@gmail.com or contact us at newideaconsultnigeria@gmail.com or call us on phone on 080 3586 9524.